Hey everybody, Rich with Prep You outside the bunker down here in the family room. All right, so this video is a little bit outside my wheelhouse, and how it's coming to you today is I heard a financial analyst, and his name is Christopher Whalen from the Whalen Global Investment Group. He was on one of the local radio stations here, and they were talking about different subjects, and really piqued my interest with what he had to say at the very end. Okay, so that's why I want to say this right off the bat. I'm not going to start out with what he said right at the end, because I went back and I grabbed the podcast and I listened to it over and over and over again and checked out some of the stuff that he said, which was kind of interesting. So you've got to stick with me to the very end on this video. Okay, really. It's really important. It's not a real long video. There's a lot of information in here. But it's super important you stay to the end, because he validates a point that we all have been saying for a very, very, very long time. So also, I want you to know that I am not a financial analyst. Okay, that's why I looked into some of the stuff that he said. I couldn't pick a stock if you wanted me to. Now, do I have investments? I do. But I picked the right person to invest for me to do the investments, because I couldn't, like I said, I couldn't pick a single stock or a bond or a commodity or whatever. My life depended on it. So, let me say before we get too far, do your own research with this. Don't just like go out and go crazy from what I'm going to tell you that he said, because he's just one analyst. He's just one view, although it seems to be a view of a lot of global financial analysts. I'm not talking about the guys that, worry about stuff, in the state or the county or the country, but globally. He looks globally at trends and stuff like that. So without further ado, let's get into U.S. bank and dollar collapse, question mark. Well, like I said, listen to a guy. His name is Christopher Whalen. He's a financial analyst, and he runs the Whalen Global Investment Group. And the whole conversation on the radio started with the crypto guy. All right, and what happened, and him coming back from the Bahamas and all that. They started talking about that, and their next discussion was, well, what about crypto? Where is crypto going? And he basically said, well, the thing about crypto is it's been around about, I believe he said, 8 years. It's been high, it's been low, no regulation. Everybody's been just freewheeling it, doing whatever they want to do. And now this is the first major collapse in any crypto market. And he's saying it's not the first, or it won't be the first. It's not going to be the last, I guess. It's not going to be the last. We've all seen crypto money go way up, way down, in between, and all that kind of stuff. But this collapse, he says, is important for many reasons, because a lot of people invested in this crypto and they lost all that money. Okay, and a lot of big name investors and banks and other people lost money in this. And if the market goes the way that he thinks it's going to go, there's going to be other losses in the market, other crypto groups collapsing, and that's going to take a lot of money down, and a lot of it is U.S. dollars that could go down. He related it to the possible collapse of the U.S. dollar, and basically put it on the politicians, the way that they just keep spending, and it doesn't matter what the party is, what your affiliation is. It seems like all they want to do is spend, and just spend us into oblivion. And like he said, politicians can spend now, and they can bring all that money home in port to where they live, which makes everybody happy, because they're getting a new bridge or a walkway, or the salmon's being saved, or whatever, and it helps the local community. But it's throughout the U.S. that all this money is being spent, and we're sending it to other places, like border security in this bill. It's not U.S. border security; it's border security in the Arab states. But he looked at it that if it keeps going this way and there's not a stop, that the United States is going to look like Venezuela, only that we're going to have nukes and they don't. So, and it's very possible that that can happen. And they started talking about US dollars. And he made the comment back in 2008 with that collapse, everybody ran to the US dollar, which really propped up the US. Uh, Main reason was uh, when you trade in U.S. dollars, there's no government premium. If you trade in euros, or back then Deutschmarks, or the yen, or whatever country, there's a premium you pay. Well, in U.S. you don't. You just buy it. You just buy it at whatever the market is based on how much you're going to buy. So countries came to America and kept buying the dollar. And his point was, with all this deficit spending, like another, the Senate just passed what, $1.7 trillion, and although the House Republicans are saying, whoa, 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 hold on a minute, there's too much crap and pork and stuff like that in this bill. Even the Republicans are infighting over all this, and you're going to see this play out in the next month or two. And he was saying that countries won't be coming to the US to buy the US dollar, and there's a very good chance that the US dollar becomes a secondary currency to some other currency. Now, he didn't go into what currency um, that could be, but he was saying it's very, very easy if the politicians keep going on the track they're going, that it's only going to get worse because they're just gonna print money. Then he brought up something that I didn't hear about, and maybe you didn't hear about in the market, um, is that there was a default in the reverse market industry, a company that did reverse mortgages, bank paper, backed up by the feds and everything that like that, defaulted. Okay, which means that they couldn't sell their paper to anybody else to raise more money to do more mortgages. So they defaulted on payments. The feds came in and they had to take this company over. And he was saying that probably won't be the last to have issues. And he says that's very, very hard to believe, because they're dealing with pieces of paper that are backed by the federal government. Well, nobody wants to buy it because they don't believe that the federal government is going in the right direction. All right, stick with me. I know. I'm getting deep, deep, deep into the weeds, and you're going, geez, Rich. Well, do me a favor. Clear your mind, hit the subscribe button, ring that bell, and we'll take just a breath here, and we'll get into bond markets and banks are having a real hard problem right now, Christopher stated, because the interest rates are changing so fast, they can't keep up with it. They can't keep up with the federal regulations. They can't keep up with percentages of dollars that they have to keep on hand from the feds and all that. And he made the comment, banks at this point banking system is actually at a negative net worth. Why are they at a negative net worth? Because the bonds that they hold now, that they bought back in 2020 and 2021, are now worth 70 to 80% of what they used to. Banks can't sell them. Okay, they're stuck with it. They can't, and they can't sell that. They aren't going to take a 20% net loss on that money. And if they can't sell their bonds, they can't make money. They can't, then they can't lend more money. All right. And he says one of the major causes of this is the Fed. And the Fed's monetary policy is, as he stated, their first thing that they wanted to do was they wanted to chase full employment. Okay, so they kept everything low. They wanted people to get out there, get a job, businesses to, borrow money so they could build up and hire new employees, PPE loans, and now there's another loan out there. I can't remember what it is. Employee retention loans. I think, you've gosh, you've all heard commercials for it. Everybody wants to come to you and say, hey, I can get you money for your company based on your employees. I'll only take a small portion of that. But the feds were chasing full employment, and now all of a sudden they switched over, and now they're chasing price stability to get rid of inflation. And his comment was they're going to have to keep going back and forth, because as the interest rates go up, people aren't going to have the money because they're having to pay on their debt, and they're not going to be able to get cheap mortgages, and people aren't going to buy stuff. So then people are going to get let go. They're going to be, let go, fired, whatever you want to call it. And then they're going to have to chase full employment again, and the banks and the bond market can't keep up with all this. So, and he said a lot of it has to do with the Humphrey Hawkins law, which he claims is socialist in nature. It sure seems like it when you read about it. It has to do with banking. But he was asked then, do you see an issue with banks in the new year? And he says, yeah. He says a banking crisis is coming. He says the biggest problem is when you go back to the paper they have to hold, when another company can't lend against a piece of paper guaranteed by the federal government. That's a big problem. That means you can't have the turnover. You can't have more money to lend, like I said earlier. And mortgages is the biggest problem right now. He says because so many people got really good mortgages. I mean, 1, 2, 3, 4% mortgages over the last couple of years. And now you're seeing 6, 7, 8, maybe even going higher. Everybody's going, I'm not moving. I'm staying here. So that mortgage money isn't going back into the market, and banks have to get their money from the Fed at a higher rate. Well, they have to try to get higher mortgages for that, and nobody's doing it. A good reason, kind of a good example of that is this is the 10th month in a row that new home sales or home sales have gone down. Okay. He said they are doing mortgages, but a quarter of the mortgages they did a year ago. And that shows you how much money's not flowing and circulating through the market, where the banks can't make any money. So nobody's selling, nobody's buying. So it's a major liquidity problem for these banks. A huge problem. His comment was banks are going to hunker down, and they're not going to lend this money that they have to keep at the rates that they can get, because nobody wants to buy it at the rate they can sell, and they're having to pay more money for the money to lend out, but nobody's buying it. So they're hoping the rates are going to fall. They're just going to hunker down, not do anything, and that's going to be horrible. And what he said was even worse is if you have some big name banks either fold or roll over, okay, then you've got a big problem. What that will do, that will cause stocks to drop, that will cause the bond market to go crazy, and there will be huge wealth destruction in this country based on the dollar and paper held by the Fed. And he said that the thing with the stocks and why stocks are going to drop so much, he says stocks are still very, very expensive, especially bank stocks. And there's no reason for them to be expensive. He says they've gone up 40% over the last year, when in what we've been having, the reduction in the inflation and stuff. Stocks should have gone down, but they've been propped up by the Fed and banks and stuff like that, and it's not gonna be good. It's not going to last forever, and stocks are going to crash, and you're going to see a lot of wealth destruction, and that's going to hurt, the wealthy, but it's also going to hurt Joe and Jane down the street living on teacher's pension or fire department pension or whatever kind of pension. All right. So that's what people don't realize. When stocks do good, Mr. and Mrs. America does good too. Just the guy down the street that put 35 years in at the fire department. or the teacher that taught for 40 years. You know, it's going to affect their pension, and that could hurt them down the road. Um, and this is why I wanted you to stay to the very end. So at the end, it was almost the end of the segment. So the two hosts said to Christopher, they said, "So I guess I should be buying, you know, this or that or precious metals or whatever." And he said, "Well, I suppose." He says, "But if it was me," he said, "I'd be investing in double aught buckshot, canned food, water, and warm clothes." Let that sink in for a while. A major financial analyst, a global financial analyst, is saying, be prepared, fill your shelves, be able to protect those shelves, get warm clothes, be prepared. And he wasn't kidding. The host kind of laughed a little bit and he kind of said, "I'm not kidding." He says, "It's time that we all hunker down, we all get our houses in order, and we get a little extra food, a little extra clothes, and a little extra ammunition to protect everything we have." And that's what we've been saying for years. It's very, very important to prep and make sure you have what you need. And one of the hosts actually said, he says, you mean basically prepping. And he said, there are many, many people in this country that have basements full of food, have the right equipment to protect that food, and are ready to hunker down and protect themselves and their family. So think about that. Now is the time to see what you've got. Most of you, you've been following my videos for years. You know what to do. You know what you need. But please do an inventory. If you don't have enough, get more. If you're new to prepping, go back and see my videos on how to start, how to get what you need. If you've been watching my channel just for 2A stuff recently, prepping is even more important. 2A will protect what you have, but you gotta have it. All right, you've got to be able to have at least 2 to 3 weeks or 2 to 3 days of bug out food or more, but you have to have at least 6 months to a year of shelter in place food, water, medicine, and enough clothes and devices like generators and stuff like that to protect yourself and your family and to still be able to eat. So that's it. Strange way to come to that final conclusion. But when I heard this guy talking today, I thought, especially after he said, yeah, double aught buck, canned goods, water, and clothes. So that's it. So like we always say at the end, well, one thing we always say at the end, if you're not a subscriber, please subscribe. But please prep like your life depends on it. 2, have enough food, water, medicine, and stuff. You know, whether you have to bug out or shelter in place. In the wintertime, I hope it's shelter in place. I hope you don't have to bug out ever in the winter. And please, please prep like your life depends on it, because even this guy knows prepping will save your life. So thanks a lot. Take care. See you next time.